Hello, this is George. This video is about the interest rate, and how the interest rate can be affected for some reason. And the reasons, we're going to talk about them over here. Now, a lot of time you would see some people announcing some interest rates, or you would see the prime rate, how much it is, and then you would be excited about that and you want to go get that rate. And when you go to get that rate, unfortunately, you will be disappointed and you won't get the rate. And there is reasons why you don't get the rates, and it's good to be educated about it, so that way when you are trying to refinance or trying to buy a house, you understand what could affect your rates that will change it from whatever the prime is, or whatever the bottom line, until whatever it is in the market. So here are the things, the factors that could affect your interest rate. Factor number one is your credit score. The lower credit score, the higher the risk you become, then you will get a higher rate. Percentage of your equity in the price. So if you have a more down payment, you have low risk. But if you have a small down payment, or you are refinancing and you have less equity, then you become higher risk when you have very little equity, and the rate is higher. Your occupancy, if you are buying or refinancing a second home, or buying or refinancing an investment property, it is not going to have the same rate as if you are buying or refinancing your own home. The rate is going to be higher. Cash out, if you're going to get refinanced cash out, that's going to lessen your equity. It's going to put you at a higher risk, because you are taking cash out of a property that already have a high equity. So then you get a higher rate. If you decide to eliminate your impound, when you eliminate your impound, the bank is going to worry about you eliminating the impound. And the worry is that you might not pay your taxes and insurance. So for the bank or for the market, you become a higher risk, so you get a higher rate. If you are an investor and you finance more than 5 properties and plus, then you become a higher risk investor. So for those properties that are the 5th and higher, the interest rate is going to have a hit. It's going to be higher than a normal interest rate on an investment. If you want to remove the bank fee, sometimes we have to remove it for compliance reasons. So the loan will go through, and then you're going to pay a higher rate for that. If your loan is high balance, if you go over the conforming loan limit or the FHA loan limit, then you become in the high balance area. Of course, certain areas is not allowed and certain area is allowed, but when you are in the high balance, you're going to pay a higher interest rate, because you are in a higher loan zone, and the higher the loan, the more risk you are, and the higher the rate. If you are subordinating a loan, a lien, let's say if you have a Hero, or if you have any lien on the house, or if you have any second loan, and you want to refinance the first and you want to subordinate them, or you're buying first and a second, when you subordinate the first with the second, the rate on the first is going to have a hit, and you're going to have a higher rate. Those are pretty much the factors that could affect your interest rate not to be as low as possible. So keep that in mind when you are trying to get a pricing, when you are trying to find out the rate. If somebody asks you some questions, and mainly they want to know your FICO score, they want to know about the property, so they can give you accurate rate. Otherwise, they're going to give you a rate that when you come to really get the loan, it's not going to be the same rate. It's going to be completely different. And this is how it is. If you have any question about rates, about what to rate today for that fits you, please give me a call. And the number is there. I'll be more than happy to help, whichever way you want the loan for. Have a good day.